Second day of red arrows around the world as they've had a recent sizable move. The Dow set another record yesterday as eyes turn towards retail sales this morning. Can this current strength continue? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are slightly lower this morning as we're seeing a correction in world markets. Now, the question is today if we'll see the Dow manage to hit 8 consecutive up days. Now, Scott, I know you're not so much a headline guy. We shouldn't get too much sucked into the headlines, but this is pretty notable.
Yeah, it's notable because they say it's the first time it's happened in 16 years. But what's funny is yesterday the market was down all day, and then at the last few minutes of the day, I think the Dow closed up 1.5 points. So in that headline of 7 days going for 8, you know, some of these days were like 1, 2, 3 points. But anyway, I do think that the market's been acting very healthy. And, you know, headlines like this, Brittany, what they do is it gets attention to the market because there are a lot of people still on the sidelines, a lot of people that might have been stopped out or said, I can't touch the markets after the financial crisis or because of the fiscal cliff or because of the sequester, and it's showing them that it can go higher and they can make money, so maybe it brings some attention back. Right,
and it can get a lot of people excited.
Yeah, why not?
Could you give us a visual then of the Dow and what like the levels are that you're paying attention to?
As traders, we get excited when we see tight channels, okay? And then when everyone else gets excited, that's when we get a little weary and we want to think if we could sell into it. And anyway, you go to the visual here of the Dow and you will see, you know, lots of tight little patterns to get involved. This was, you know, the end of December, or actually to start the year, where we had the break of this downtrend and it ignited a move that followed the 8-day moving average. Then here is when it got tight again. This is when you had that area where everyone was worried about the elections in Italy. We broke the 8 and 21 day and then regrouped really well. Closed right back above the 8 and 21 days. So this was, as a technician, the time to get excited, the time to get back into multi-positions as this little pullback led to nothing and we held one of these trend lines. And then this is when you broke out above 14,150. And then here we are, you know, 7-8 days later. This isn't the time as a market participant that has a plan that gets excited. This is the time when you take some off the table and get excited if we could have a slight pullback perhaps to the 8-day or maybe even a little bit further to retest the 21-day like we did right here. This is your exciting time as a prudent market participant, and this is, you know, your excitement if you want to sell it because you bought into this space and maneuver your portfolio.
Right, and turning to the S&P did close in the red yesterday, but it held Monday's low. So should we just take this as a sign, just needed a bit of a breather?
Well, anytime you've had an extended period of time with a rally that's up 9% already for the first quarter and maybe 25% since the summer, people think it might be more than that. So what you do is you just get flexible. So if all of a sudden your stocks are acting faulty and it looks as if we could have an intermediate correction, you add to some hedges and you stay with some positions. You don't have to be all in or all out, but you switch some gears so if we do correct, you're prepared for it. And as of right now, all we have is this upper level floor. If you look at the spiders, you will see that, you know, this is where we were yesterday. So taking a closer look, you know, very similar to what I showed you in the Dow. This was the gap up to start the year. Here was your digestion. Here's what we followed the 8-day. You then had some corrective activity. And if you guys remember, here was your red dog reversal. No one knew really what it would lead to, but it wound up leading to a sharp move back to resistance. And then what happened was important is we held higher. And that gave you some indications that we can make new highs above that 1530 we talked about, which was 153.30. Then from here, you know, going up pretty methodically. Now the question is, do we hold this upper level? Do we hold the spiders above 150, what is this, 155.20-ish? And if not, maybe we test the 8-day or even, you know, this gap which comes in right around, 153.50. But at this point, you know, we held here yesterday. Now let's see what happens this morning as we're opening right around there with the futures this morning being a bit softer.
And retail sales will be out this morning, will be an important look at the consumer. Seems like expectations are for good numbers. Could that be a potential catalyst this morning?
Yeah, or it could be, you know, room for corrective activity because a lot of these retailers, you know, have been strong. You saw Target's been strong. Costco yesterday was strong. Walmart's been acting better. So, they say the consumer is the lifeblood of the market, so to speak, for earnings. So if there's faulty retail sales, then maybe the bears can point to something.
All right. Well, as traders look for potential setups in the market right now, there are divergences. We're seeing potential long setups, and we're actually seeing some potential shorts as well. But let's turn the spotlight first to tradable long setups, starting with eBay, which managed to close slightly higher yesterday when the broader market was down.
Yeah, and it shows you that you can time these things, or at least trade around your tier system, because eBay's been a strong stock. It's had nice earnings. It's been trending for months or years. But then every now and then there's a time to take some off, and then a time to potentially add or get involved without chasing. If you look at eBay, this was that upper level flag right there. Okay, this is when he had that wide range bar and it broke. So here was a nice little exit. So if you exited eBay around 56 as a trader, it then had a quick move lower to the 50-day, a small bounce back, and then continued lower to a more gradual, longer term trend line. So it shows you that, if you were so excited and initiated here, you didn't have to. You waited for your pullback, and then there it was yesterday. Yesterday, it did outperform the market, and you had a bit of a red dog reversal. So today, with the futures lower, I know some traders, even myself who's not in eBay, I might look to buy it for a negative to positive move. And if it were to trade above yesterday's close of 53.10, I do think you get an extra trade there. And if you, sold, if you were in tier 2 waiting for, some type of breakout and it didn't happen, you got back to tier 1 because you've been in it for this entire trend for a while, this was your tier 2 entry. Or if you just sold it and wanted to rebuy it back, this is at least a level to trade against, and here's that low to trade against, which is about 50.90.
And the Nat Gas Group outperformed the market yesterday. Phillips 66 is a good-looking name among them. The stock held the prior breakout level yesterday and finished the day up 8%, so looking pretty impressive already.
This one is a different type of trade. It hasn't pulled back. It's trading near the 52-week highs. So, momentum's been hard to find, and I don't really trade this group well, but, people were pointing at this chart, and sometimes a chart's a chart. So if you look here, it is near highs. It just let the 8-day catch up. It's not really extended. If this were to start taking out the high here of, 66.40, you can get a trade there, and if you've been an investor in this during the entire trend, congratulations. Maybe you get a little extra cash flow, but this setup still looks very positive.
And there's also a possible long trade setup in Sprint. There's an ascending triangle in place here that's getting pretty tight. And what typically happens in this case? What might we see happen in Sprint?
If you see heavy volume, it trades through resistance that it hasn't been able to do for about 6 months, then you get some new motion, because there's been people sitting in this stock. It's been trading like a 25 to 50 cent range for 6 months. So usually you can't stay there for that much longer. At this point, it seems like it's going to take out the upper end. You look at the chart here. I haven't played this in a long time, and someone's like, Red Dog, look at this since October. It's been trading between 5.50 and almost 6. So right there, this starts to get above, $5.96, $6 on heavy volume. You could see a cash flow move, and if you were an investor sitting in tier 1, this would be your tier 2 if it has that volume. You look at the monthly chart, look where it is. I know it had a big move off the lows, but in relative speaking or perspective, it was a hell of a lot higher a long time ago. At this point, we'll see. I don't think it'll get back there, but why not 6.5 to 7.5 on this move? We'll see.
All right, and Walmart, after a few days of rest following its big move on March 4th, Walmart broke out with good volume yesterday. So should we be keeping this on our radar for some continuation today?
This one will be a little tricky with retail sales. I'm actually long some of this also because, it had a nice pull in and then it finally expanded. You look at the chart, you'll see that there were 2 times I've started talking about Walmart. Last year was my, retail stock of the year, and it met the objectives way early. And then you had this breakout failure, which led to some corrective activity. And then we talked about this 72. At 72, you had a nice breakout. Then what did it do? It waited for the 8-day to catch up. So that's when we got back involved. Chart Girl was all over this, and now it looks as if it wants to continue. It's going to have to take out 74. But all in all, it's been a nice trade, and especially look, tier 1, tier 2, back to tier 1, and maybe tier 2, or you sold into this, and this was a price to maneuver yourself back into the game with.
All right, coming up, we're going to go on the flip side and go in the trenches with stocks that don't look too good and could be potential shorts. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that don't look too good right now and could be potential shorts, starting with Caterpillar. What has you thinking it could be poised for lower prices?
Because it didn't work as a long. Recently in the last week, I've been like, okay, let me go with some names that people like to have rally but are laggards, and why are they laggards? So, I tried them as a catch-up play from the long side, but typically, if you do that and you do it in the later stage of what, a rally has been, and it doesn't go, those are the first to sell off. So I tried it long. I'm not shorted right now, but if you look at the chart here, it's showing more negative signs than positive signs. First of all, you look last year, when it peaked, you had a lower high. This was support that broke. You could have got out of the way, trended all the way down, had a nice bounce back into the 200-day, failed, and then, looked a little bit better at the start of this year, but then, this also failed. Okay, here is your, almost little head and shoulders top that broke support, came in, and then it looked as if you would get some kind of laggard bounce play. Okay, and and right here, if you look, I tried to buy it into this area and it didn't work, and then yesterday engulfed the entire day. So right now, if you want to just call a spade here, you do have somewhat of a bear flag. Here's your pole, here's your flag, here's your support. As you can see, markets are all the way up near the highs, and this is near, the lows, so it's showing relative weakness. I don't know why, maybe, I'm not even going to speculate, but anyway, the price here is 89.40. This starts to break through 89.40. You could see it move back down to test at least this support coming in right around 86. So, there is something to do there if you're looking for a laggard, weaker stock, even though it is a big name that people like to own. Right,
and another big name where we're seeing a bear flag pattern is Schlumberger. So what are the chances we'll see this stock break to the downside from this bear flag?
Same type of scenario. I tried being long it late last week. It's been weaker as far as the other refiners. All these stocks are at highs. This one's not. So I'm like, Schlumberger should be able to play some catch up. Tried it, didn't work, got stopped out. I'm not shorted. I'm just showing you a weaker pattern here. You look, Schlumberger, if you remember, a few weeks ago, tried to break out right here, and it didn't. Remember this breakout that had that inside day and then it failed, and anytime you try and break out and fail, it's not healthy. Then it traded below, this area and hasn't been able to reclaim it. I tried being long once or twice in here thinking it can get going, and it's somewhat failed, and at this point it starts breaking below 76 and this market does pull in. This could be a candidate to pull down to the 200-day, which is around 73.25. So I would just be a bit careful here because this is lagging and I don't know why.
Well, we hate to include this stock on the list, but Apple just cannot manage to put two green days together in a row. It closed down over 2% yesterday, and more bad news about the stock today. Now, IDC is forecasting that iPad sales may fall behind Android sales for the first time this year.
Right, and I'm not trying to be a bear on Apple.
Right.
I'm just trying to play the price action, and I know Monday looked good. Some talk that we'd finally get the special dividend. There was talk that you can get the buyback, and so far it's still proven to just be talk. And anytime you anticipate something coming from the company, it could hurt, like it hurt yesterday for me, because we all went, or at least I went home long Apple and in various accounts, and it opened up down $4, tried to go positive, and then engulfed all of Monday and closed near the lows. So that got me out of it. I had stops in place. I said I'm not going to show Apple commitment unless it shows commitment. That I'm going to do a level versus a level and get some paper cuts, because anyone who's been just cost averaging down, you could have started, if you look at this chart, a lot higher and maybe been put out of business. Here's that head and shoulders top right here. When you had that 700, here's when it broke the 21-day moving average, which if you remember was following for a nice 2-month time period. That's when I got out of my swing way back when. And then since then, every rally, wound up failing. Right here was your 3-day rally off the 50-day. Here was that trend line. You want to talk trend lines. This was, an intermediate trend line that it broke below, couldn't reclaim. And then, fast forward to where we are, a level versus a level has been working. Some people are having nice success shorting it at the trend line, and I won't say that's me. I've been trying to do cute buys. Like this was a nice cute buy that went 60, 70 bucks. Here was another little cute one that failed right away. This one was another cute one that traded into the gap. So there have been times to trade this small little bounce. This one was a lot smaller. And if you look, closer up here, just so you could see it, let me just show you this way. Here was Monday, where it seemed as if, it broke above that 435, which at the time was important, and I still think it was important. And then look what it did. It engulfed it in one red day. And I guess it could, go green today and we could see it. But if it starts breaking below this 425 to 420, then all of a sudden you're going to see people talking about the monthly chart, which shows how there's not a lot of support all the way down to like 351 or even maybe 380-ish. So at this point, this fast and furious rally has rattled a lot of people. Rally to the downside, or correction, so to speak, sorry. So at this point, it's still hard to trust, and I would still do a level versus a level, not the accumulation game, because anyone who started that at 600, I'm sure might have hit it out and might not be able to recover from that.
Yeah, it's such a case where it's hard to keep your emotions from getting involved. Are you still having trouble staying away from this one? Well,
I've been trading it a lot less. I used to trade it actively all day long with other things. Now maybe once or twice a day if there's a setup, and then there goes a few days now where I don't trade it, and I'm hoping today just to avoid it. But 2 days ago it made sense, okay? You saw a negative to positive move, you saw heavy volume, it traded above a level. I'll do that every day, when there is something presenting itself, and the right trade was to take it home. It just didn't work. Take your loss, move on, and we'll see if there's another approachable trade, in the future.
All right, but just wait for that opportunity to present itself. Don't go looking for it, it seems.
Right. If it pops at you and smacks you, then,
in the face, you take advantage of it.
An apple can smack you in the face and in the tush. But
I think it's happened. But all right, let's move on to another potential short. Baidu has been acting weak since earnings. How bearish does this one look right now?
Well, this one, at least we've been talking about how, you had that gap down after earnings, never filled the gap, and it continued lower. It hasn't been like a crash, but it's been incrementally lower. And you look at Baidu, it was a former leader. You look at the trend way back when you had, a high, a lower high, another lower high. Then you had that gap down on earnings. You remember we had it here in Morning Call a few times saying, if it doesn't fill the gap, it should trade in continuation of that gap. And here it was as it went below 95. And now we're back to some really big support. So here is macro support on Baidu where it's not showing any kind of life. So if this were to start breaking below this 87-ish, you could see a quick move down to 80, and then there's really no points of reference until way back here, which comes in right around this is like the low 80s right around there. So just be careful. This is a pretty big level right here in Baidu.
All right, and getting in a home builder here, Toll Brothers closed down yesterday over 2.2%. This seems to have been struggling, so could we see some downside follow through today?
Well, you want to see when the markets make new highs and a stock fails and makes a lower high, it's just a little bit of a warning flag. And if you look at Toll Brothers, you look here, you will see this was the high in Toll Brothers. Here's a lower high. This is when this level gave way. It failed right here around 36. Okay, so then what did it do? Came back, tested support around 33, rallied back, retested where it broke down from and started to fail. So you have a high, lower high, another lower high. So this could be something that works its way back to at least 33, because if you look at the home builder index, it actually went back to the highs where this stock didn't. So this is showing a little relative weakness to the group. So I would just say be a little bit careful there. If you're looking for something to short, this is a candidate.
All right, let's run through some quick hits here. Facebook still choppy action here, hasn't found any real momentum. What level does it need to hold to keep its composure intact?
Just to be real quick, 2730 is an intermediate level. It should hold. Doesn't get momentum until it gets above 2865.
Okay, and after several recent upgrades, looks like Google may be losing steam. So is this stock weakening?
Every time you get 4 or 5 upgrades, you always have to be a little curious, especially if it doesn't get any traction. It's been a big time leader. For now, it held the 8-day. The quickly, you take a quick look here. Here is the 8-day. Here's your point of reference. The longer it stays above this 823 and goes sideways, this is a leader, and this will give us some clues. But I would be a little careful considering the size of the move that it's had.
And Goldman closed the day down nearly 1% yesterday. Action's been choppy here. So what levels are you watching?
This, I would say, I'm just going to show you on the chart. Financials made a new high. Stocks like Citigroup, JP Morgan, blah, blah, blah. This is still going sideways. I would say here's your new channel. I would be, it's already given back the 8 and the 21 day. I would just watch this level here around 147. I think I'd rather see you buy it right around here, and that by that point the 50-day will have played catch up. And it was traveling a really nice trend. This was that accelerated uptrend that broke right here. Since then, it's been a two-way trade. But I'd rather see you buy it here versus sell it here, and that's a bit closer to 147.
And Core snapped back to the upside yesterday with a decent gain of 2.3%. Can the upside continue today? We do have retail sales coming out.
This one I feel is a bit broken. You know, I say stock. You know, a lot of traders get trapped, and sometimes that changes the complexion of a stock. Looked great after earnings, was breaking higher. All of a sudden, traders walked in or heard that night, oh, did you hear Coors did another secondary? And they went back to the punch bowl too much by letting these insiders sell too much stock. And now, if you look at Coors, you know, that was this day. Looked great, ready to break out, boom, sandbagged. A lot of traders, you know, hear footsteps and they say, I'm done with this for a while. Then it filled the gap, came back up and continued lower. It was stronger yesterday and closed strong, so maybe, you know, there's continuation, but I do think that you're going to get a decent amount of resistance coming into this 58 and change, so maybe there's a cute trade here. But overall, I think this needs a lot of time because there's still a lot of memories about this recent action here with that secondary.
All right, so what's on your radar heading into trading today?
Well, the question is, you know, I have less exposure long than I had yesterday. I think I came in with like 11 longs and 1 short. Today I come in with like 6 longs and a little bit more of that short. So the question is, you know, if we do break that upper floor, okay, which was around 155.20 in the spiders, you know, can you add to your shorts to make a little extra cash flow if we go down and test some lower levels, or do you cover there? Because every time, you know, I've tried to press one of my hedges, you know, as it looks like we're getting weaker, I wind up losing money on the hedge where I could have made a little bit of money by covering and adding to my longs. So, you know, that trend has been something not to do. You know, adding to shorts has not worked, but every time you get a bit more extended or a bit more of a bought, you know, there's a chance it might. So I'm going to try and, you know, stay with some of my longs, keep my hedge on, you know, not put too many things on, and see, you know, how we handle this upper area to see if I could put on more longs or, you know, get to more, you know, cash for the short term.
All right. Thanks so much, Scott, and happy trading to you all. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.